Meta beat earnings tonight. Stock crashed 7% in minutes. Microsoft beat, went up. Same earnings recipe, two opposite reactions. Stay with me. There's one signal nobody is connecting today. 4 of the biggest tech companies reported tonight. Google, Microsoft, Amazon, Meta. All 4 beat earnings. Every single one. But the market reacted in 2 completely opposite ways. Microsoft jumped. Azure cloud growth came in at 40%, way above expectations. Google jumped harder, cloud revenue up 63%. Meta, down 7%. Amazon, down 3%. Same beat, different reaction. Why? It wasn't the earnings number, it was one line in the press release. AI capex guidance. Microsoft and Google basically said, yes, we're spending huge, but look, the spending is already paying off. Cloud revenue is exploding. Meta said, we're raising our spending by another $10 billion next year. And the market said, prove it. Here's the detail nobody is mentioning. Meta's Q1 capex was $19.8 billion. Expected? $27.6 billion. They underspent in Q1 by $8 billion. Where's that money going? Second half of the year. The backloaded capex is even bigger than the headline number. And get this, last year Meta bought back $13 billion of their own stock. This quarter, 0. Capital is being redirected from shareholders to AI infrastructure. Same story at Amazon. AWS grew 28%, fastest in 15 quarters. EPS crushed. But capital expenditures, $44 billion in 1 quarter. Free cash flow collapsed 95%. Add it all up. Google, $180 billion. Amazon, $200 billion. Meta, $145 billion. Microsoft, $130 billion. Combined, over $700 billion on AI this year. That's a country's GDP, pour into AI infrastructure in 12 months. Where does the money actually go? Most retail investors look at NVIDIA and stop there, but the money flows through a pipeline. Step 1. GPUs. NVIDIA still gets the biggest cut. Step 2. Networking. Companies like Celestica building the high-speed switches. Celestica revenue jumped 53% yesterday. Step 3, and here's where it gets interesting, memory and storage. Every AI model needs a place to store data, training data, weights, context. And the chips that handle storage are running into a wall. Listen to what Meta literally said in their earnings call. Quote, they are extending the life of existing servers because they cannot get enough memory chips fast enough. Read that again. Meta, one of the biggest buyers in the world, cannot get enough memory. Translation? Storage is the new bottleneck, not GPUs. GPU bottleneck was 2023. Memory bottleneck is 2026. This connects to one company reporting tomorrow. SanDisk, ticker SNDK. They make the enterprise SSDs, high-performance storage chips, that go into hyperscale data centers. Stock is already up 260% this year on exactly this thesis. Tomorrow's report is the proof point. Watch 3 things: data center revenue, buy CS8 next-gen storage ramp, and any update on hyperscaler qualification. Here's the warning every retail investor needs to hear. Beating earnings is not the same as the stock going up anymore. Celestica beat yesterday, fell 8%. Meta beat tonight, fell 7%. Amazon beat, fell 3%. In this market, the print is yesterday's news. Forward guidance is what moves the stock. And the macro? Fed split 8-4 on holding rates. Oil at 115 on Hormuz tension. This is a stock picker's market, not a buy-everything market. So the connection? Big Tech said this week they need more storage. Tomorrow we find out if SanDisk is the one delivering it. That's the connection nobody sees. Follow for next week's hidden link. We dig the stories Wall Street is not telling you. This is not financial advice. Always do your own research. Let's get it.